here.
You know, this is actually good for me, teaching you what I know because it's reinstilling things in me that like teaching someone helps you too, if that makes sense. I don't know how to explain it, but I don't ever do this. I don't ever do that because I've seen it 1,000 times already in the past 3 months. It's already just common sense at this point. But yeah, what you said was that's pretty much a trend line break. No, I guess it would have been a trend line break if you got in up here, but look what happened to the guys that got in at the trend line break. We would have gotten wrecked. There was, I mean, I guess if you had a big ass stop loss, we ain't trading trend line breaks. That's all I know. All I know is that's a trend line, and when you see a trend line, that's liquidity for us. And if I see a fair value gap like this, a very obvious fair value gap that everyone's going to try to short, all the ICT traders are going to try to short this, all the retail traders been shorting this. I'm gonna go long here. I'm gonna go long here, and I think we're gonna go all the way to high of day. Actually, that was a perfect liquidity pool. Why? We had equal highs up here. Equal highs, which is what? A double top. All the retail traders are shorting this too. This is a double top. They're shorting this. Guess what? Your stupid double top and your stupid trend line got completely wrecked. Yeah, it took all day, and I don't hold runners like this. I don't hold trades this long. But from our entry, if we entered here, we would have caught more than enough of the move. This is 40 points. You don't even need 40 points in a trade. If you do 40 points a week, you're good. So our entry would have been here. We would have bagged 400 or 500 bucks in profit, and we would have just called it a day. I mean, there's really no need to hold it that long unless you're just greedy and you want to hold it all the way to the high. But we already took out enough liquidity there. So the fair value gaps is how we enter, and we're going off of liquidity. Here was another one. This was actually at 4 p.m. This was before the market closed, but
Isn't there isn't there a bullish fair value gap there too though?
yeah. So
Because
there's
the
a
big
bull, yeah, there's a bullish one. So the big banks shot the price up here, but guess what? So we have a bullish one,
oh,
and
but
then
then the bearish one disrespected it and made it irrelevant.
yeah, we didn't respect it. So when you see us dump, especially with a big ass candle like this, after what? After what did we do? We took out this liquidity. We took out all this liquidity up here. So there's people selling here, here. There's people selling all this, trying to sell this. We
Mhm.
popped up. We took all their stop losses, and then we disrespected it. So now the people are like, "Fuck! I just got stopped out, and then it goes in my direction. Fuck!" Just like we used to. And so now my entry would have been the close of this bullish fair value gap. So that's a bullish one. And we would have shorted that. Off of this candle, I would have entered immediately. If I seen a candle like this, and then from here to here, that was 30 points. 30 points is $600 with one contract. So that's money right there. And guess what's right here? We have more trend line liquidity here. Retail traders. When
Hmm.
I see a trend line, yeah, you can call it a trend line break, but it's not because I'm entering on the fair value gap. If it was a trend line break, I bet you that shit doesn't work. I don't trade trend line breaks. I trade fair value gaps. But when I see a trend line, I'll draw it and I'll be like, okay, there's there's stop losses here. There's stop losses here. There's stop losses here. There's stop losses all the way here. We didn't get all the way down in here. We might. I don't know if we still will. This is actually live market right here, but this is Asia session. The reason I don't think we're gonna be coming down anytime soon is because if you look at the daily,
1 second, bro. I got a call coming on. Let me finish
okay,
up.
do your thing, do your thing.
Yeah.
Yo. So that was just our entry method, but
Hmm.
this is the 4 hour time frame. sometimes you got to use like your brain a little bit on the higher time frames. This is all-time highs right here. We just made all-time highs last Friday. The market has never been up here before.
That means that there's gonna be a lot of liquidity at that level.
Exactly. So with this big bullish candle from today, we should go take out all-time highs. So tomorrow's Friday. Friday, we normally have bank runs and we're just trending all day on Friday.
Mm-hmm.
During the week we chop up a lot, but on Fridays we're trending. So tomorrow I'm bullish. Tomorrow I'm bullish.
Mm-hmm.
So all I need to see tomorrow. So if this is all-time highs right here, yes, there's a bunch of liquidity. There's a bunch of liquidity up here. So I'm bullish. Tomorrow, all I need to see is this right here. Market's not open right now, so this is bullshit. It's not going to be good. All I need to see is a bearish fair value gap, just like this one. We're in Asia session, so it's not going to work, obviously. None of them work. None of them get respected in Asia session because there's just no volume. You can actually see all the little volume imbalances in between the candles. That's different than fair value gaps. That's a different PD array that ICT teaches, but I don't really get into them because all you need is fair value gaps. So these are volume imbalances, but you don't need them. I don't use them. So here's a fair value gap. All I'm going to look for tomorrow is for us to, I want to see us tomorrow at some point drop down, take liquidity, inverse a fair value gap, retrace, and then take out all-time highs. So at some point tomorrow, I need to see a fair value gap here, a bearish one, take out some sort of liquidity. Maybe it's this low here. Who knows what low it's going to be, but take out some low, some sort of low. Then I need to see a bearish fair value gap, get disrespected to the upside. And that's all I'm going to be looking for tomorrow. I mean, that's what I look for every day. It depends on what I am. Some days I go into the market and I'm not leaning bearish or bullish because it's just choppy. But if I see a good setup, I'll take it. So tomorrow I'm just looking for a bearish fair value gap to get disrespected because I already know we're bullish on the higher time frames. But I'm going to wait until the kill zone, which is 8:30 a.m., 9:30 a.m.
What's a kill
Um,
zone?
New York session basically. But
Yeah.
so here. There's a few things you can know. I mean, this shit is just extra. These are high probability times. I have an indicator for this as well. These are ICT indicators you can see in the top left corner. Lux Algo
Uh,
ICT indicator, Lux Algo ICT. So they're not indicators to help you with your trades. They're indicators that help you with time. From 8:50 to 9:10, we normally have an expansion. From 9:50 to 10:10, we normally have manipulation. The reason these things are so on point and the reason this is even a thing is because the markets are ran off of algorithms and he knows how it's all ran and he's taught it. I don't know how he knows. I don't know if he was part of the people who made the algorithms or who gives a fuck. No one cares how he knows, but what he knows works. So from 10 to 11 is going to be a high probability time. These little macros in here are going to be high probability times as well. Basically, bro, it doesn't even have to be in any of these times. Just make sure you're trading New York session or London session. I probably wouldn't trade London session, but New York session, you'll be good. Because you see, what did we do? What did we do here? We did nothing. This is Asia session. As soon as New York session comes, what the fuck happens? Big difference, huh?
oh yeah.
Consolidate, consolidate, consolidate. New York session comes right at 8:30. Boom, expand. So kill zones, trade in the kill zone. If you don't trade in the kill zone, your trades are not going to be respected. Like right now, I doubt anything's being respected. There's no reason for it to be respected. The algorithms aren't even trading right now. There's nothing going on. Ah,
Hmm.
but let's go. I'm gonna trade. I'm gonna do some back testing and I'm gonna show you. I'm gonna show you just some live trades. I'm gonna go quick with it. We'll see how many I win. We'll do 10. I'll do 10 trades. We'll see how many out of 10 I win. Actually, I'll make the chart like this so I don't know what I'm looking at and I don't know what it looks like. I make it small. We go back in time. We go back in time. All right, we'll just go here. Should be enough trades in there. All right, right now what time is it? It's 6 a.m. So I'm gonna wait a little bit for the market to open. You see though, when we're bullish, we respect them all. When we're bear, and we disrespect all of these. We disrespect
Mm.
all of these fair value gaps. There's a bunch of fair value gaps here. Yeah, these are tiny ones. And the bigger the fair value gap, the better, not gonna lie, because they're just more obvious. But here, what time are we at? We're still at 6 a.m. I'll see if I find a trade right now. I doubt it, but all right, see now we're getting some volume. 7 a.m. If if we inverse these two, if we disrespect these two, I would take a long. The reason I would take a long is because we're delivering from a bullish one. And let's see if we disrespect these though. If we don't disrespect them, I won't take a long. Oh, now we created a bullish one, so more confirmation that we should go up. Never mind, we disrespected it. So now I'll take a short here, honestly. We disrespected this bullish one. We disrespected a bullish fair value gap right here, and we're delivering from a bearish one. I'll take a sell here. Look, I actually put a sell on the screen. I'll put my stop loss. My TP, we'll just aim for this low. These are like equal lows here. My stop loss isn't actually going to be a hard stop. It's if the candle closes back above. So let's wind price. Boom. We hit 175. We just made 175 bucks in 7 minutes. 7 minutes winning trade, 1 for 1. All right, let's go to the next one. Does that make sense why I took that trade though?
Yeah, because you had the you had a regular fair value gap, and then it didn't get and then it was destroyed by a bearish one.
Exactly. So we had a bullish one. It got disrespected by the bearish ones. The problem though, you're gonna come across, it has to be one fair value gap in the leg. So this is a leg right here. This is a swing low to a swing high. There's only one fair value gap in this leg. When you start getting multiple fair value gaps, like this right here, when you start getting a bunch of them like this, there's no way of shorting this because you don't know. Yeah, let's just say we disrespected this one, but we might still respect this one. So it has to be a singular fair value gap. Does that make sense?
Yeah.
So here there's two in the leg. Since there's two in this leg, I'll go on the 2 minute time frame. And guess what just happened? Look. So here on the 1 minute, we have a fair value gap right here. And we have another one right here. These are bearish fair value gaps. Make them yellow so you can see a little better. Thank you. So there's two here. But what happens if I go to the 2 minute time frame? Oh shit. Now there's only one. Now there's only one fair value gap. So now that's good. This is a nice trade. But I would have never went long because we never disrespected it. We we respected it. And as you saw, I took a short right here as we disrespected the bullish one. So that's it. That's one trade. Either we're delivering. So as you can see here, we never swept liquidity. I know I tell you about liquidity. We never swept this. Reason we never swept this is because we're holding this fair value gap. If we're respecting this, there's no need for us to go up here. Plus, liquidity was already taken here. I don't know if you noticed this. Big swing high, big swing high, taken out. We already took the liquidity, so there's no need to go back up. So I'm bearish here.
Hmm.
Now, what did we just do here? Oh, this is a beautiful trade. I see another trade. You see how many trades there is? There's so many right here. We swept liquidity here. We did a liquidity sweep right here. Actually, were those equal lows? Okay, so we swept this. We swept this right here. And what are we doing? We took the liquidity from the bottom, and let's see if we disrespect this. My target would be this one because we never see it's a bad risk to reward. But let's see if we boom. When you see this, you
That means
see
bullish.
hell yeah, you see this getting disrespected. There's three fair value gaps here. There's one, two, and there's another one down here, a little tiny one. One, two, three, four. Four getting disrespected. I'm gonna go long here. And honestly, my target, look at that. Look at that. A beautiful liquidity right there. Why is that liquidity? Because there are a bunch of equal highs. It's a double top. It's equal highs. People are shorting there. So my take profit is going to be right there. My stop
Mm.
loss will be a close below. The reason I have my stop loss down here, I tell you, I don't use a stop loss. My stop loss is if we start disrespecting shit down. So if I'm bullish and we start disrespecting shit to the downside, I don't need a stop loss. I already know that if we disrespect a fair value gap down, I'm out of the trade. That's my stop loss.
Mm-hmm.
Because there's really nowhere to put a stop loss here. Where are you going to put it? You don't know which one it's going to respect. You don't know which one it's going to disrespect. All I know is if we disrespect one, I'm out of the trade. So we're here. We should hit this. Boom. We just hit it. We're up. We're up 330. We're 2 for 2. So we took this liquidity now. It's 7:35 a.m. We're still not even in the kill zone, but I think we're going to go to this high right here. The reason I think we're going to go to this high is because we're so close already. When you're that close to another high, this is where all the liquidity is. We're going to take that shit. Boom, we took it with a huge ass candle. I didn't take a trade there because there was no entry. There was no fair value gap for me to enter. But it's good to see price play out like that. Like, okay, we have a high here, there's liquidity. And then boom, we just completely violated it. So it's good to see that. There was no entry to get in there though. There was no fair value gap. There was nothing to enter on. And then
Oh,
we play price. If I see something good, I like it, I'll take it. Now, our next liquidity, look at that. I think we're pretty bullish here. It's not, I think. Let me go to the 1 hour and tell you why I'm bullish. This works on every time frame.
wouldn't that
On,
be at a premium though?
it would technically, but when we're violating shit like this on the 1 hour and we're this bullish, we just violated a huge gap on the 1 hour. We closed above it. Guess what? We have we have all these highs up here. All of these highs. This is trend line liquidity right here, whatever liquidity you want to call it. There's a bunch of highs here. My guess is we go to this high next, right here. So if we're on the 1 hour and we see this get disrespected on the 1 hour, I'm gonna drop down to a 1 minute, 5 minute, whatever,
Mm-hmm.
and I'm gonna look for my entry, and my take profit will be at that line. So now we're gonna look for what I need to see here. I need to see a big dump. I need to see price dump down, big red candle, and then I need to see price disrespect the fair value gap going up, and that'll be my entry. If we get it. I don't know if we're gonna get it. Price should give it to us here. Damn, it was right there. I fucking missed it. Damn it.
Wait, what?
Yeah, I missed the entry right there. There's a little fair value gap right here, and we disrespected it with his big ass candle. I'm gonna take my target to this high because we should go there. Nothing is guaranteed. You are right. We are in premium. We probably shouldn't long, but I'll take my chances. Oh, actually, this is 9 o'clock. Market hasn't opened yet. Right here, I'll place my buy. I forgot to place a buy. My take profit will be here. My stop loss will be here. At this point, before, if the market's about to open, I know the market's about to open. I'm gonna set my trade to break even. We're only demoing here, so I won't, but I'm gonna set my trade to break even because I know 9:30 is coming, and you know what 9:30 does. But guess what happens before 9:30? Our take profit hits.
Nice.
So now on the 1 hour, if we took out these highs, if we took out all, look, we even took out this high way over here. We took out this high. That means, in my opinion, if we keep going up, we'll go to this high over here. You see, we have another high over here.
Uh-huh.
So there's more liquidity to be taken. If we remain bullish, we should hit here. But if we start to reverse, I'm gonna look for some sells. So that's we're 3 for 3. Let's see if we take the next liquidity above. We're very bullish, a lot of momentum. 9:30 will probably just pump us up here. Honestly, in my opinion, 9:30 hasn't came yet. It's actually 9:29 right now. The next candle, in my opinion, should pump us up here or give us an entry to go up. If it doesn't, we don't take a trade
Oh,
because I'm
aren't those bearish fair value gaps right there?
they are, but
Pretty big.
there's nothing we can do because the price hasn't done anything to them. Let's see if price disrespects it, I'll take a long.
Yeah, because it's a bullish
There you
market
go. Exactly. So
price.
exactly. So I'm bullish. This is a perfect entry. I'm gonna buy here. Look right here. We're up $1,000 already on 3 trades. I'll, s- I'll semi take profit here. I'll put my stop loss
Okay.
below. So this is a perfect trade. We know that we have liquidity up here on the higher time frame. We know we're bullish on the higher time frame. We have the banks, the banks were selling here. Now they just got violated. There's, the banks, they don't all take the same trades. There was probably banks selling here and there's probably banks buying here. But once these banks that sold here saw this get violated, they're gonna probably start to go long too. They're gonna probably switch their position in reverse and go up with the trend. They don't want to get wrecked. I just got wrecked. Could have been an SMT. Also could be. Why? We're so high up here. We're so high.
Premium
Yeah, exactly. Price needed to retrace there a little bit. But you know what? That was a winning trade. You want me to tell you why?
because it disrespected the bearish fair value gap and it gave you a bullish one.
No, yeah. Well, I took that buy and I got stopped out. I shouldn't have got stopped out. My entry was here, 57, 17,757, 667. I would have put my stop to break even. If you're up 10 points, I always put my stop to break even. That's just what I was taught. Because if you're up $200, why the fuck are you gonna just let it come back and hit your stop loss? So that one, this is back testing and live. When you're trading live, it's different. I didn't realize, but that would have been a break even trade. So you can call it 4 for 4. That would have been a break even trade. I would have let it hit break even because if I'm up 10 points, I put my stop to break even. That's important. Stop to break even will save you a lot. Yeah, you might just the break even hurts, but it's better than losing. That would have been a break even trade. So here we're still bullish. And what did we do? We swept this liquidity. Fuck, I can't even draw. This stupid tool is horrible. We took out this low. You see, we took out this low by like a tick.
Yeah.
We took it out by a tick if you zoom in. And what do we have here? What do we have, JD? We have a perfect entry right here. If we violate this, we should violate it. If you're bullish, I'm bullish, so I want this to get violated. If it doesn't get violated, I don't take the trade. Never gets violated. Now we get violated. It's 10:09. It's prime time to be trading. I'm gonna take a buy. I'm gonna take 2 contracts there because I'm confident in this one. But you never know. When price hits here, I'm gonna set my stop to break even just because if it takes that liquidity potentially it could reverse. But I am bullish here, so we should be good. I'm actually gonna take 2 off the table. I just took some partials. That was that was like 5 points. So we took some partials, that was 5 points. And now we're gonna set our stop to break even and see if we hit our take profit. Boom, hit our take profit. So that trade was a success. We're 5 for 5. So now look what happened. We took out all the liquidity up here. We took out all the liquidity. There's nothing. There's nothing to the left. So now, honestly, if I see us go above this high a lot, I'll stay bullish because we're at all-time highs. You're honestly better going long at all-time highs than shorting. But if we come back down, I'll take a sell. Who knows? Let's see. So I'm gonna do 5 more trades. I'm gonna do 5 more trades. I'm 100% win rate so far if you don't count the break even. This doesn't look bad. This sell, since we took out the buy side liquidity, we took out the liquidity from above. That means we should take out all this liquidity down here. We should. Don't quote me though, because we're at all-time high. So selling in an all-time high market is not the smartest. We
So if it dis
violate,
oh
yeah,
man.
well, we never even came back to it. So we're just really bullish here. We're just way too bullish. And once we're this far away from it, I'm not gonna even look at that fair value gap anymore. Now I'm gonna look at other fair value gaps. Oh, there was another entry. Fuck, I missed it.
You talking about the
Ah, right here. This was a long. So since I know we're at all-time highs, the long should work. Most of the time, your longs will work at all-time highs. So I'll go long there. You see, we have a bearish fair value gap. It gets disrespected. I already missed the trade, so I can't take it. There's another opportunity though here. If we violate this one, you know what? I'm gonna go to the 2 minute. See, there's a better fair value gap on the 2 minute. So If we violate this, it's not super obvious, which I don't like. I like the obvious ones. But if we violate this, I'll go long. Oh, we might just get another one on the 1 minute. There we go. That's better. So we never violated that. No trade. Okay, if we violate this, I'm in. So that's a bearish fair value gap. If we violate that, I'm in. And since there's no liquidity above, I'll just take it to this next fair value gap. It's there's really no good risk to reward here, but it's fucking 11:30 a.m. You shouldn't even be trading right now anyway. It's 11:30. It's lunchtime. No trade should be even taken. So we never violated it. I'm just gonna use the indicator because it's easier than drawing them. Now you can see all the fair value gaps getting respected or disrespected. I'm gonna wait for something textbook. So price respects, price disrespects, yada yada yada. All right. There's equal highs here. So I'm gonna long this soon. If we get an entry, there's so much liquidity here. There's one, two, three, four. There's so much liquidity here. I want to see the market dump right now and then give me an entry to go back up. So, oh, perfect, perfect. I don't know if it'll give us the entry, but oh, what just happened to my computer? All right, so I'll go long if I see perfect two. No, actually, we didn't sweep that low. Boom. We swept this low. We know we have fucking triple equal highs here, quadruple if you count this one. You don't really count that. We got one, two, three, four. Four highs up here. We already took out these lows. We already took out the lows. You see? Does that make
Yeah,
sense? So these highs were never taken. We never swept liquidity here. We swept all this liquidity here. So what should you be? You should be bullish.
bullish to take out the highs. So but
Ex
you're waiting for an entry with a fair value gap to get in, or are you just getting in because it took out the lows?
No, no, no. I'm waiting for a fair value gap to get disrespected. But the problem with this leg right here, this whole leg,
Hmm.
this leg, there's fucking one, two, three, four, five. There's six fair value gaps. And look, I don't know if we're gonna go up here, but the problem is with all these fair value gaps, if let's just say we disrespect this one, you see this one?
Yeah.
If you disrespect this one and take a buy and go long here, you don't know if these are gonna get disrespected. That's why I like only one fair value gap in the leg. Does that make sense? One in the leg. So here, there's like 13 fair value gaps. There's way too many. You don't know which one it's gonna respect or disrespect. So when you see all these like this, you don't want to use them. This right here would be nice, but I'm not sure. I'm not going short here. This one right here would be perfect because why? It's a bullish one and it's only one in the leg. So when we disrespect this down, you know it's going down because there's nothing else holding it back. With this, there's all these holding it back. You don't know which one it's gonna disrespect. You know? Does that make sense?
Yeah. So most people are getting in as soon as they see a fair value gap and they're using the bottom of it as a stop loss.
Yeah, I
And
would say so, but people who are doing that are losing.
yeah, those are like the newbies. And so
Exactly. They'll see a fair value gap and they'll just fucking buy it or sell it for no reason.
you're
And
waiting for the fair value gap to get disrespected to go in
And
on.
exactly. So that's literally it. But right here, the problem is there's too many fair value gaps. So yes, I want to go long here because we took the liquidity from below and we're gonna go up here. We're gonna go up. We should. But the problem is there is no fair value gap to enter on. Maybe a 15 minute. I guess you can get a 15 minute, but I bet you by the time this 15-minute fair value gap. See, now there's only one here. See, there's only one fair value gap.
Yeah.
Now if we disrespect this, you know it's going up. When there's too many, you don't know which one it's going to respect and disrespect. But I bet you, see, we disrespected it. So what would you do here? If we swept this and we inverse this, we swept this low, took liquidity from the lows, we disrespected a bearish PD array, so we're going long. You would go long there, right?
Yeah, put a buy in for those highs where the liquidity's at.
Exactly. So I would go long here. I only have 10 minutes left in the meeting, I think, but boom. I would pretty much be out there. If I'm up 900 bucks, I'm probably getting out of the trade. But you know what? We'll stay in to the TP, to the liquidity, and we'll hold it at break even. Boom. There you go. It hit. It didn't stop us out at break even, and it took out the liquidity that I was
Brown
telling you.
income.
Huh?
You just hit the monthly income.
Yeah, look right here. All that liquidity, what did we do? We fucking went up and took them all out. I don't care. We only went above it by 2 points. We took out the liquidity, and that's what I was targeting. All these retail traders. And that's really it. That's 6 for 6 now. Let me go. I got four more trades. I'm gonna do them quick. I got four more trades, and then we'll call it. You gotta watch this guy's videos though. All those that playlist, watch his videos. You'll understand more.
Shoot, I'm ready to get a futures account. I gotta wonder if they take Bitcoin.
Maybe. All right. So that's not bad. That's not bad. I'll take a long here. It's not a high probability long because it's fucking 3 o'clock in the afternoon. But I'll take a
Oh,
buy. I'll take a buy here for the fuck of it. There's
because the
equal high.
market's because the market's bullish. There's a high to the left above,
Yeah,
and
there's
I expected a bearish fair value gap.
exactly bearish for value gap. Oh, also you missed this. Look at all this liquidity here that we took out. We swept it with no, we just took it and went back up. All these lows right here. People are buying here. People are buying here. People are buying here. We went, snatched our stop loss, went back up, disrespected this. I'm long right here. Yeah, we got a little bit of drawdown, but price respected our inverse. We closed. You see the bodies of the candles algorithmically respected this.
Hmm.
That's a signature in price that you need to remember is if the bodies are respecting a fair value gap like this, I would go long. This is I'm long here. Look, look what happened. You know why this lost? First losing trade. Reason this lost is because it's fucking 3 o'clock in the afternoon. We shouldn't even be taking a trade. It's the end of the kill zone. I shouldn't even taken this trade. But if it was during the kill zone, this would have been a good trade.
Oh,
I'm gonna
true. You only make 180 here, and you made like 1,000 on the other one. So
Yeah,
because
exactly.
there's no
The,
liquidity in the market.
yeah, there's less volatility. Yeah, sometimes that's funny you notice that. Sometimes a candle like this during the kill zone will be like 40 points. A candle the same size outside
Uh-huh.
of the kill zone is only like 10 points. So it's really weird. That part is weird. I had to get used to that with futures, but this trade lost. I don't see why we lost. I bet you we go back up and take that out eventually, but we took out more liquidity here. So I got one losing trade out of seven. I'm gonna go to the next kill zone and I'm gonna take a trade. I'm gonna take three more trades and that's it. Three more trades. I've only lost one out of seven. Let's see what happens in the next kill zone. All right, it's 9:30 a.m. Fuck. All right, we'll just play it. We'll just play what we see. That was stupid. I missed the fucking market open. Oh no, I didn't. This is the market open. This is 9:29. All right. I'm gonna go to the 15 minute to see what I see here. Okay, so on the 15 minute, we have a bearish fair value gap. If we disrespect this, we should go up. And we put in an order block right here. That's an order block.
Oh yeah,
Uh,
just disrespected it. So you think you would put in a buy here because it was a bearish one and disrespected?
Yeah, but the problem with this is I don't trade the 15-minute time frame because you gotta wait 15 minutes for a candle to close, and our stop loss is based on the candle close. So I only take my entries on the one, two, three, four, or five. If we Nothing above the one, two, three, four, or five because of how I use my stop loss. Because if you wait for a candle to close below, like right here, let's say I would take a buy. I don't use a stop loss, like I said. My stop loss is when the candle closes back below. So how we closed above here, I entered a buy. If we close below, I exit. But I think this buy would be okay. I just don't trade the 15 because of the stop loss. We'll see if it works though. Actually, what I would do here is now that I know we're bullish here, I can drop down to the 1 minute and look for another confirmation set up on the lower time frame. So
So you're looking.
I'm gonna look for a confirmation set up on the lower time frame. Nothing yet. But keep in mind, this is the 1 minute chart. We know the 15 minute should be bullish. So we're looking for buys here. There's nothing yet. I want to see this be respected though. If I'm bullish, I want to see this big fair value gap get respected, or I shouldn't be bullish. Okay, so since we disrespected it like this, and I know we have this trend line liquidity here, and we have a lot of liquidity here. This is just a bunch of accumulation, and then we get manipulation, and now we're about to get distribution. This is what ICT teaches. Price accumulates, it it manipulates, and then we distribute. So I'm gonna take a sell here because I am bullish on the 15 minute. But the problem is, if I'm bullish, this should have been respected. This is a bunch of mess for you. Sorry. This should be respected. If I'm bullish on the 15 minute, it should be respected. But since it's not being respected, I'm just gonna do what the market tells me. I can't get stuck on one bias like I'm bullish, I'm only taking longs. If the market's disrespecting this, I can't be bullish. So I'm gonna take a sell. It looks good to me too. I'll I'll just target this low for now. Honestly, I probably could target this low all the way over here, but I don't know if that'll hit. We'll see what happens first. Boom. Big ass candle. Now at this point, I'm up 225. I'm gonna take some partials and I'm gonna set break even. I only took one contract, so there's no way to take partials, but I bet you we go down here. Let's see if we end up going. No, we don't end up going, but that move right there, if you entered on this candle, this close of this candle here, if you entered this and just caught this move here, you're done for the day. That's it. That's all you need. But let's see if price eventually goes where we want it to. I'm bullish, so oh, actually, this is perfect too. We took out sell side liquidity. So we took out this liquidity. So now I'm 8 for 8. I have two more trades, or I'm 7 for 8. I lost one. 7 for 8. So here we have a bearish fair value gap. And remember earlier in the day I was bullish. I was bullish, but we had to adjust to the market. So I see this get disrespected with liquidity taken, this V-shaped recovery. This is a signature in price that's just way too bullish for me to not go long. I'm gonna go long here, and I'm gonna just target this high because why? This high, people were selling. So now there's stop losses up here. So now we're just gonna go right back up, take these stop losses, just like we came down here and took these stop losses. So I'm gonna go long. There's no telling if this works because I can't see news events and I can't see SMTs, but that's something to keep an eye on. Boom, take profit hit. So now we're 8 for 9. Pretty good, not bad. The win rate on this strategy is incredible. That's why risk to reward doesn't really matter for me, honestly, anymore, because the win rate's so fucking high. This is 8 out of 9 trades in a row. I can't even see the news events. I can't even look for SMTs. So the one way will probably be even higher if you can look for news events and look for SMTs so you can avoid taking losses. But this was as textbook as it gets. We took this liquidity, we disrespected this, we fucking took the high, and that's it. Now since we took this high, I think I have one more trade I can do. I'm gonna take an A plus setup. I mean everything I've already taken was A plus, but okay, on the 15 minute, let's see. Oh, we put in an order block here, and now we're respecting it. So that's a good move. That's a good sign. An order block is when we have a down close candle before an up move. Now this is an order block. This should get respected. I don't think we'll go back up here because we already took out a lot of liquidity up here. I'm kind of bearish right now, but let's see what happens. And see what happens. We fucking take the high. We
That's a fair value.
dump. Yeah, this could have been an entry. This little one, but the problem with the little
Depending
ones, huh?
depending how the candle closes, you might get another fair value gap, given how big that one was.
Yeah,